Most beginner traders are told that the market only moves in series of lower lows and lower highs for a downtrend and higher highs and higher lows for an uptrend. But when they come in the market, things are not what they expected at all. Guys and girls, in this video, I will explain to you the nature of how the market moves. Knowing how the market is moving is very essential in helping you as a trader to be able to predict the next market movement and possibly getting entries along the way. But before we do that, you must know first about the nature theory. The market moves in three phases: impulsive phase, corrective phase, and lastly another impulsive phase, and the cycle continues to repeat itself. An impulse is a phase in which price moves in one direction with higher momentum than usual. An impulse can be identified on all time frames. It's highly important to remember that no market in the world moves in impulsive phase consistently. There must always be pullbacks, which for this case, they come in form of corrective phase since the market moves in cycles. Corrections, on other hand, are just counter trend movements that they just range. It means there is no any real progression of the market in either direction. Looking on Boom 300 on 1 hour time frame, we can see clearly how the market has been moving. The formation of the doji candlestick right here served to show that the previous trend is now over and the market is now heading to another trend. And here came this impulsive move right here. Then afterwards, it came this impulsive phase. Afterwards, it came this corrective phase. Afterwards, the market broke this sideways movement by completing with the third impulsive phase. So we can see here clearly that we had our first phase, second phase, and lastly our third phase completing our cycle. Now with the experience in the markets, after this impulsive phase ended here, you could see that the market did actually form a consolidation before going to this impulsive move right here. But by combining our knowledge of how the downtrend market moves, we can see that this impulsive move just came to retest this previous lower high. I'm saying this clearly so for you to not be confused, because some may use this information the long way and do some stuffs like this. Correction, then boom, easy, right? No, that's not the way. With the knowledge of knowing how the market moves, with the retest here by this impulsive phase providing us with these multiple weak rejections, this could have been your perfect entry to ride these trends. For beginner traders on this video, there are multiple factors for entry to consider, such as these M patterns and so on. To learn more on those, please take this time to like this video, hit the subscribe button to become a member of this community, then turn the notification bell icon on to be notified on the latest uploads from this channel. Here we are on Crash 500. I'm going to show you how the three-phase work on this Crash 300, only this time on an uptrend movement. We can see that we had our impulsive phase, then came correction, afterwards came an impulsive phase to mark the end of our first cycle. After the formation of this impulsive phase came corrections as expected. Now since this downtrend market movement is over by breaking of this previous lower high, we can expect the next impulsive phase to be in the upside direction. Guys and girls, I do have a Telegram group where I share my trades plus motivations to help you keep going in the trading industry. The group is private, of course. You can't find it by searching on Telegram. To join the group, only use the link that can be found in the description below to avoid scammers. Lastly but not least, Don't forget to like this video, hit the subscribe button and turn on the notification bell icon on. Bye bye, till next time.